For sure, for based Germany, as the head of Asia Pacific at Natixis Investment Managers, given the market conditions are particularly complex and unpredictable, what is your take on the situation?
It's true that the situation our clients are facing is challenging and stressing. Post-COVID, most of us thought about a significant growth across the board, but the reality is different and totally unexpected at such a level. Let's summarize it this way. We see supply chain disruptions, shortages, and high commodity pricing that are leading to a high inflation across the globe. The war in Ukraine is also reinforcing that effect, while bringing new challenges, as for instance, accelerating the energy transition. And then we can hear about some fears about a recession that can affect regions in a different manner. All of these lead to interest rates rising at a different pace depending on the markets, high impact on currency exchanges, and a strong volatility on equities. We don't know how long it will take for the situation to become more stable, but we know two things. This is leading to a massive repricing of assets, and then a total reassessment of traditional asset allocation that now has to fully integrate ESG factors. So as a conclusion, it is true that can be an important source of stress, but on the other side, it can also lead to important opportunities for asset owners.
So, what are the opportunities that you see in this climate, and which asset classes do you think present good investments?
Until the beginning of 2022, trends were pretty clear and investing in equities was the only way. We even used to say there is no alternatives to equities. Now there are alternatives. The situation changed dramatically, and this is probably one of these moments where you see a time for a change. All asset classes can present some opportunities as soon as you can be selective. For instance, now we can see entry points on the bond markets as yields are becoming more compelling on some segments. We continue to see opportunities in private assets, even if investors has to be more selective. Energy transition is a must-do, particularly in Europe, but not only. ESG becomes totally mainstream, leading to a major repricing of assets in order to comply with more and more stringent regulations. And last but not the least, equities remain attractive depending on the style and region of investments. The common factor of all of these is about active management. You need to be selective. You cannot be any more a trend follower. Investors should target conviction and research-driven managers.
What can Natixis Investment Managers bring to investors in this context?
At Natixis Investment Managers, thanks to our model, we are expert collective. With close to $1.3 trillion of asset under management, our 20 affiliates are specialized and dedicated to their respective investment strategies. We have 4 categories of investment managers: traditional long-only, liability-driven, quantitative, and alternative with a high focus on private assets. There are 3 important elements to consider. First, we believe in active management, which is particularly well suited considering the market conditions we just described. Trend following won't be efficient. You need to be specialized. Research will make the difference. That can be for fixed income with Loomis Sayles or Ostrom, equities with Harris Associates, Mirova, WCM, DNCA, or Thematics Asset Management, and then private assets for which we have one of the most compelling offers from private equity with Flexstone, real estate with AW, infrastructure equities with Vauban Partners, and a large range of private debt capabilities that includes MB Credit. The second element is ESG and sustainable and impact investing. Over the last 4 decades, we have been pioneers in ESG thanks to our European roots and our strong convictions. Today, ESG is very trendy and we see a lot of latecomers, but we are one among the few to be a real player with one full-fledged ESG manager, Mirova, and most of our affiliates are placing ESG at the heart of their investment processes. Today, ESG and impact investing assets are representing 1/3 of our AUM. We have the ambition by the end of 2024 to reach more than 50% of our AUM. The last element, but not the least, we believe in our teams on the ground. We have local and dedicated client-facing professionals across all Asia Pacific, from Tokyo to Sydney through Singapore, Seoul, Beijing, Hong Kong, or Taipei, always happy to propose ideas and innovative solutions to our clients.
Thank you, Fabrice. Thank you very much for your sharing today.
Thank you.